Hello and welcome to iTradeAIMS.net, the London report, episode number 8. The last report was December 2019. It was the 10th of December and I discussed the secret pattern. I wasn't planning to have such a big break in between, but it happened to be nearly 4 months now. Anyway, this is episode number 8 and today we are going to talk about how to trade under current market conditions, and is it good or bad that volatility has gone very, very high? Now this is an interesting question. I get asked a lot, but the reality is that these are interesting and exciting times. So let's go to the charts. So we have missed on a lot of discussing a lot of different sessions that we have gone through in London. So what I'll do is that I'll give you a recap of what happened last week or a few days ago. And then hopefully if I continue to do my London reports during this month, I will go through the previous ones. Most probably not, because a lot happens during the day. Right, with first message from Sam. He talked about the setup yesterday that worked from here to here actually. So this was the setup 1 or setup 2, the famous pattern. So if you had entered here and your stop loss was there, obviously it went down pretty nicely. And that then gave him an idea to actually go again short on the euro dollar. So to answer the question number 1, which was how to trade under current market conditions. So as you all know that the markets are highly volatile these days. These the Covid-19 coronavirus has brought a lot of volatility into the market, and the simple answer is that I've been waiting for this, not the coronavirus, but the volatility of the market for a very long time. Because if you look at the markets, the Forex charts, they were moving 30 to 40 pips a day. And so there isn't much that you could do within that. So we were confined, we were restricted to trading the hourly or the 4-hour and daily charts. But now, since the market moves 100, 150 pips a day, different pairs move that much, you can actually trade any of them on the M1 chart. So that is what we have been doing. So we trade the DAX, and the DAX, the bloody brokers have increased the spread far too much, 4 or 5 spread on DAX. Where is it? Let me bring it here. So if you look at this, the spread is quite high. Well, actually it's pretty low at the moment. It's 3 or 4 because there isn't much activity in the market. But if you go to previous dates before the April, the market has a lot of activity. If you look at this, in one day you have moves of 500, 300, 500. So this is the DAX that's moving that much. And obviously US 30, which is the Dow Jones Industrial Average, this has been moving, as everyone knows. You know, the swings on the hourly chart are 1700 points. Yesterday was like an up and down day. It moved about 900. So the range is really, really high. Within those ranges, if you trade the M1 chart using the setup 1, you will have many, many, many setups. Like right now, right on this picture, you have this perfect setup 1. So this is the 3 wave, the peak of AO, then the cross of 0 line. Purple is correct. And then you have the red dot telling you to look at the chart. There might be a setup. And you see the chart and you look at it that the box is tight. So Gator is inside the box and Gator is stepping up. And before that it was stepping down. So it's got a peak here and a cross of 0 line. And while this is happening, purple is correct. It's not mingled with the Gator. And so you would put your pending order here. Your stop loss will be either there or here by 50 points. And then you trail your candles, or when this candle happens you get out. So you made 100 points. And that is what we have been doing all these days. So let's go to some charts. So we are doing two things. One, we are pursuing the M15 charts. So on the M15 chart, all you need is 3 to 4 charts. So if you follow the pound, the euro dollar, and the dollar yen, maybe the dollar CAD if you like, or you can have the Australian dollar if you want. And then what we've been doing is that we are looking for setups like these. And this, as I showed you just randomly before, our setup is this: the peak of 3, then the peak of AO here, then cross of 0 line, and then this setup. This is the setup 1 as a whole from here. So when you are about to trade, this is what you see, right? This is the M15 chart for the dollar yen, and Sam called it out. Let me bring that. And I said that at that time that, you know, if this setup didn't have this bit and it was just this peak and then going sideways, then it would be a lot even more beautiful. But even then, it was a very good setup. And so you made your entry here, and your stop loss will be either here, 25 points. And now it's kind of hit your 2 hour points, but we already exited around here. And what I did is that I went onto the M1 chart, which is my habit. So what I did is that I traded around here now. Same setup, you have the 3 up, the 4. So I got in here, and then I trailed my candles and got out there. So before, you know, the guys on the M15, let me just mark this with a yellow box. So when I go to the M15 chart, you will see. So before the first candle had ended on the M15, I had already taken about 2% from it. And then, so within this wave, now the wave is up. If you go back to the M15, you had another setup. So you traded it here, then you have a setup 2 here. You can take a gain for another 2%. Then you wait for it, and you have another setup here and another setup here. And it's all the same setup, same different time frame. So what does volatility has to do with this? Now, a couple of months back, the volatility of this chart would be so low that if I looked at this area from here to here, you will probably have 7 or 8 or 10 pips. This dollar yen chart normally would move like, so yesterday the range has been about 100 pips. Today the range has been about 75, and it's already produced quite a few pips, quite a few setups on the M1 in there. But if I just randomly go back and just click the home button, and this is taking me to somewhere in March. This is April last year. So if you look at this last year, the whole day is producing 44 pips, 35 pips. This is a very good day, so it's done what, 62 pips. This is where it's done 70 pips. This is a trending day. And then on non-trending days, what, 55. So that was the normal of it. But these days it does 100, 150 pips. And that means that if a Forex pair has less than 2 pips spread, and it can do anything above 75, 100, even better, 150 pips, in that range, it will produce quite a lot of setups on the M5 chart, the M15 chart, and especially the M1 chart. So if you look at this, now it's doing 200 pips. So in this day, the range has been 190. So that means that on that day, you will have quite a lot. So as the volatility is there in the Forex market, now we have a lot more options. We can trade a lot many pairs on the M1 chart. The problem only is that on M1 chart, you cannot really trade or follow more than 2 to 3 charts. So I took this trade and then took another one here. Let me just drag and drop it so it makes sense. Yeah, here is the entry and this is the exit. So this is just 7 pips, but the risk was around 3 pips. So that's double. My original target was here, which was hit as well. Let me now take you to the step-by-step charts that I actually posted in the chat room, sort of to give you the, sell you the idea of joining the chat room. why is it beneficial? And it is beneficial because you can do stuff like this. Oh, so meanwhile, I also actually took a trade on the euro dollar. Anyway, you can see that there's a 3 down here and a 4 up, and that's the setup one. And now then I updated it. Why is it such a good setup? Because on the M5 we also see this. We don't really need to see the M5. And then the next one is the following up. So the wave 3 started, and the idea at that time was that this wave 3 would turn into a wave 1, and what we think is a 5 would probably turn into a 3, so we can let it run. Meanwhile, I'm updating here the that I've taken the setup on the dollar yen on the M1. This is how I started. Then we got an update from Sam, who shared that he was short on the euro dollar M15. This is where he took his entry. The stop loss is up there. And if I go to the MT4 charts and go to the M15, then you would know what he got from it. So this is where he entered, and this is where he got exit. So if you risked $100 here, about half an hour later you had turned it into 200. If you had $500 risk, then you were sitting at 1,000. Meanwhile, this is where I took a trade on the M1, and this is where I added. Let me go back to that picture again. Here it is. This bit here. Oh, this is the dollar yen. So the dollar yen is a perfect setup one. Obviously a beautiful, beautiful setup one. It came here, they went up. Around that time it was doing 380 something, and then I think took profit around $500 on this. So this was like a 1% profit. I should have kept it in. This is where I got out. So that's a beautiful 3 up, 4 down, but this wave had a very high probability of turning into a new 3 because the M15 was a setup, and which I noticed that the 5 turned into a 3. So this is the setup. So the setup can get you into a wave 3 or a wave 5 if you stick to it. If you you know, use the box as a trail or the red line, or you have other idea, like we saw that the M15 was a setup, so there was a higher chance that a higher time frame wave was there. So if I stayed in it and I'd allowed it to hit my target point, this could have been like $1,000 in there, and I would have caught the wave 3. And on the M15 at the same time, this. So if you were trading the M15, you would make your entry here, and you would probably still be in this trade. Just let it run using the green line or trail the box. What else did we do? So that's that, and then I updated this, and then okay, so this is Sam's chart, how we took the dollar yen here on the M15. This is how we started, and then you have seen the result where it went. This is my chart that I shared in the chat room about how it was going. So for example, when I shared this chart initially, I had already brought your attention in the chat room to this. So even if you didn't get into it after you saw the chart, you could quickly get into it. And if not on the M1, on the M15, you get a lot of time to actually go and get into those trades. So this is a quick kind of review for today. If I were to go further detail, if I wanted to show you yesterday, then you know I would need a lot more hours, because we exchange a lot of ideas throughout the day. For example, you know, charts like these. Point number 1, for a famous setup, or this is, I'll quickly give you what is a famous setup. So a famous setup is a setup on the M15. Let me give you the famous setup what it is. Let me find those. So where did it go? Yeah. So slide number 1. What is a famous setup? So at the time of looking at the setup, if you trade the M15 chart and you want to trade the setup 1, what we call the famous setup is something where you would see things like this. So yesterday, point 1, strong wave 3 would have happened during yesterday, and it will probably end around the New York close or the midnight period around there. And the second point you would look at is that the wave 4 will happen during the Asian session. Around here it will be sideways, and price will not go above that level. It will keep sideways. And then the third point would be that around the Frankfurt Open or the London Open, you would see a tight box, sleeping gator, fresh cross of zero line, and then you would take your trade here and it would go up. So the example, this was the same like the dollar yen, but this is the example from the Swissy chart, the USD CHF. And so basically the famous pattern has to do with your wave 3 is going to be yesterday, your wave 4 is going to be the Tokyo session, and your wave 5 will be your London session. So this is an amazing setup that you can actually predict 12 hours in advance. So around here, if you were in Europe and going to bed, you look at the chart and you'd see, oh, a strong 3 up. Let's see, when I wake up, which would be around this time, when I'm going to wake up around this time, I'll see if the wave 3 was followed by a tight wave 4. So if you look at it, it stayed in this, and then it gave you this internal level here. So you'll take your entry here, and then you can have an add-on here if you like, and then trail your candles. And that's your famous setup. It is a very potent setup. You can trade it throughout the year. It doesn't take too much time, just about an hour or 2 or 1 hour in the morning around London Open or Frankfurt Open. And if you just follow 3 or 4 charts, euro dollar, the pound dollar, Swissy, dollar yen, throughout the year, you can double, even triple your account, risking only 1 or 2% on a trade. So I hope you learned something. I hope you like this. And this is today's London report. I hope I'm able to do at least one London report within a week. That's my goal. So hit the like button, subscribe, and consider joining the chat room if you like.